China, often dubbed as world's factory, accounts for around 30% of global manufacturing output. But now, China is facing the worst economic crisis driven by the bursting of property bubble and excessive debt. The property crisis has reached dangerous levels. It has reached the point where millions of Chinese purchasers have stopped paying their upfront mortgage payments. However, it seems like the problems of China's real estate market are just the beginning. From rising debt levels of real estate developers to declining home sales. The real estate sector is a large and important lever. Ever since China started to roll out reforms in 1988 for commercial housing, property has become a pillar of its economy. By some estimates, it accounts for about 30% of China's GDP after factoring in related industries such as construction and property management. Property also carries a deep significance in Chinese society. For young people who want to marry, owning a home is considered a must before starting a family. Instead of investing in stocks and bonds, Chinese households allocate most of their savings to real estate at more than twice the rate of Americans. But you must be thinking, why is the boom now turning to Bane? Let's have a look at that. A year ago, this business was humming. Then came a sudden reversal of fortune. China's property sector started to crumble under the weight of its huge debts. What was already shaping up to be the country's worst housing market in years suffered another blow when a new variant of the coronavirus triggered widespread lockdowns and brought the economy to a standstill. The turmoil has touched off a plunge in new home sales and depressed real estate prices for the first time in years, jeopardizing the prospects of an already fragile economy that had come to depend on housing for job growth and business spending, and putting at risk an important investment for millions of Chinese families. With the economy in limbo, China is trying to get people buying property again. So far, China's efforts to revive the housing market with lower mortgage rates, easier credit subsidies, and relaxed regulations have not worked. In April and May, new home prices fell in more than half of China's 70 biggest cities for the first time since 2016, and sales of such properties tumbled nearly 60%. The Chinese government also suspended a trial program to implement property taxes in March. Last month, Chinese banks cut mortgage costs by the largest amount since a new interest rate system was put in place in 2019. In addition, various local governments have rolled out dozens of new policies to promote home buying, but for potential home buyers, the incentives are not enough to offset the risk. Worried about a housing bubble and its impact on the financial system, Chinese officials enacted the so-called Three Red Lines policy to curb the reckless borrowing habits of the country's biggest property developers. The new rules, which required companies to pay debt before borrowing more money, started to expose cracks in the property market. As one of a few destinations for household savings, China's property market has expanded since the late 1990s, witnessing few corrections. Housing prices have risen, especially in large Tier 1 cities like Beijing and Shanghai. Due to the presence of collateral, both developers and home buyers have been able to secure loans to support investment in the sector. As a result, about 27% of banks' loans in China are related to property. Property developers continue to build in order to meet seemingly endless demands, but in order to do this, they had to take on debt to bridge the gap between constructions and sales. In late 2021, China Evergrande Group, the highly indebted property developer, defaulted on bond payments to creditors. When Evergrande began to run into liquidity problems, an estimated 1.6 million people were waiting for the developer to complete homes that they had already bought. Since Evergrande, more than a dozen firms have defaulted. Amid the debt woes, Chinese officials pushed developers to prioritize finishing building properties that they had already sold. But the rush by the firms short of cash to complete projects has raised a new set of problems: protest over shory work. And hence, there are protests all over the country. This distress could spread to parts of global markets like commodities and raw materials via import export channels as demand for construction materials, automobiles, and machinery drops. It has also impacted the millions of people who work there due to the construction slump, which has sent shockwaves through the economy. A crunch in the Chinese property market could result in unemployment, send the stocks plunging, and lead to deflation. All of these factors could pinch the global trade channels. So that's all for today. What are your views on this? Do let us know in the comment section. Also, don't forget to like and share this video. Thank you so much for watching.